Just switch off your volumes, please. We'll start today's market talk. It is the fear that keeps you alive, whether in war or in markets. So we need to measure the expected gains of a given investment against the risk of loss. Risk reward of roughly 1 is to 3 is generally preferred, while your investing implies for every rupee risk, there is rupees 3 potential profit or reward. And margin of safety refers to the comfort level or cushion that an investor has at a particular price. Why am I referring to this is because you will see a lot of inputs nowadays of companies. Suddenly they are becoming coming up with higher revenues. For last 10 years they have had zero revenues. I'm talking about revenues, forget about profit. And suddenly they are pitched up 8 10 odd crores of revenue in a quarter, and then suddenly the stock prices goes up 30-40%, and then next quarter will be again back. And such stocks are floated around in this environment, so just be a little bit careful. See the past history, because if the company has done nothing for last 7 8 years, it will obviously make a rounding bottom pattern in terms of technicals. Okay, so we'll go ahead. The market setup. India pipped Hong Kong to become the world's fourth largest stock market by market capitalization on January 22nd. India's market cap stood at 4.33 trillion. Just for reference, US has a market cap of around 50 trillion and China has around 8.5 trillion. But despite that, it's a good thing. Only point here is that this is basically led because of the interest of domestic investors who have become as important as foreign investors or even more influential because of the growing size of their SIP money, which in January was roughly around 20,000 crore per month, entering the market via mutual fund route. So that is the one. And in this environment, corporate governance framework becomes extremely important and critical, because then only people will have the uh, will be able to invest or come into this market without a fear of that that it's a gambling thing and all that issue. Now you must have heard about this news about Hyundai Motor is considering an India listing. It shows that it is again shows a confidence in Indian market. It shows that they think the market has evolved and matured. So any company will be home in a market where people understand and can evaluate their business model. So if people like Hyundai are thinking of listing in India, hence the corporate governance becomes extremely critical in that environment. RBI is counting on investments for 7% GDP growth in FY25. It needs to give market the liquidity they ask. They need to soften their liquidity stance if they want the GDP growth forecast for next fiscal year to come true. Right now, the GDP is driven by government investment and not consumption. And tight liquidity would endanger the beginning of a capex cycle by keeping cost of funds elevated. If you see, the headline retail inflation was 5.7% in December due to food prices, and core inflation was below that RBI target of 4%, that is at around 3.8%. So it is very important. But food inflation cannot be managed by monetary policy, because monetary policy influences demand and not the supply. And the food inflation is a supply problem, which hence, if it influences demand, the monetary policy restricts the liquidity, hence it reduces the demand. So banking system liquidity presently is at deficit mode, resulting in higher borrowing costs, and all the interest rates are still rising. And you would have heard HDFC Bank has increased their deposit rate for some durations by point by 20 by 25 basis points already. So difference between deposit and credit growth will keep short-term borrowing rates still elevated, and as we have discussed, the banks are still struggling for deposits to give credit. Rising utilization level points to a good summer for thermal power producers. Utilization levels in thermal sector rose to 72.2% in January 24, higher than any month of 2023 due to higher demand. So this should be good for NTPC, Coal India, and other power producers. But the point here is that adjusted net profits of NTPC, despite all the higher demand, only increased by 2.1% in December quarter, and operating profits were lower. Hence, it would be better to go for private power producers in this environment, especially the ones which are operating the plants which are on cost plus basis, like of Mundra plants of Adani and Tata Power. SBI, discuss about SBI. Due to its sheer size and leading market share, improved the return ratios and the favorable asset quality uh, is also helping. It should command higher than its long-term average valuation multiple, which would be around 1.3 to 1.5 times forward book. Now, strong loan growth of SBI was led by retail and SME segment. They have guided for 14 to 15% loan growth. Asset quality improved. Though NIMS declined by 9 basis points, so which is negative, but that is because the deposit growth has lagged, and most of the deposits are right now not CASA deposits, but the high cost term deposits. Most of the people are doing long duration FDs. So the NIMs were at 3.34%, but ROA is decent now, reaching 1, so it's around 0.98. So considering the SOTP valuation, it should easily trade at 800 plus. I'll tell you how also. The value of the subsidiary, all the subsidiary comes to around 200 rupees, and the price to book for FY25 of SBI should be around 480. So if you give it 1.3 times price to book, it will reach around uh, 800 630 for only the SBI business and add subsidiaries. So roughly the sum of the part value should be around 830 odd in a year or so. The other stock is Mankind Pharma. Why it is a good stock is because the domestic business continues to grow at a faster pace than the Indian pharmaceutical market. Domestic business is growing at a faster pace than others who are in the similar field. Like Mankind had a 20% growth in Q3, while Sun Pharma grew by around 11% and Cipla also by around 12%. They are focusing on chronic diseases, drugs like cardiovascular diseases and diabetes, and not on seasonal issues which are cyclical. Zomato had accelerated growth in food delivery, hyperpure, and quick commerce businesses. Gross order value grew by 6.3%. Revenue growth was 15%. Hyperpure and Blinkit grew 10% year on year. Adjusted EBITDA margin at 3.8% and will break even in quick commerce by Q1 FY25. Stock trades at 7.9 times FY25 market cap to sales. So this should do well. Last problem which we have seen was on ITC. British American Tobacco has announced it would sell 4% stake in ITC, and it will retain around 25% stake. It has around 29% stake overall. ITC doesn't has a promoter entity, so the other higher holding is from mutual funds and uh, insurance companies, etc. Now, the problem here is since FDI in tobacco is prohibited, so only a smaller subset of investors will be able to apply for this OFS or sale, whatever the stake sale ITC does, and at a discount. So if the sale happens at a discount, the stock price corrected because that is the fair. Other issue is that the cigarette volumes are moderating, so there is no growth as such. Though other their FMCG and hotel business are doing still better. Now coming to this is the ITC chart. So if you can see, it is now below its 200-day moving average, and it is oversold in terms of relative strength, and it fell on this news below the 200 EMA and came to around 410. So what? Let's see what happens. But I think it will go below 400 from here. Okay, technicals issue. US 10-year. This is the US 10-year 1 week chart. Now, if you see, the yields have bounced back up because now it is confirmed that the rate cuts are not taking place in March, and they would be delayed sometime later in the year in May, June, or some subsequently, because the US economy is pretty strong. So the yields bounced back last month. Brent crude, this is a weekly chart. So again, it's stuck in a range. It goes up, it comes down. So last week was a positive week for Brent crude. Dollar index is now started going up. So if you see, it's in a declining trend line, but now it is going to test that trend line upwards. So again, it is based on the basic issue is that US economy is strong and they are not cutting rates. So this is the reason why the dollar is gaining strength, and it will be negative for all the metals and commodities. Gold had corrected again, but it is at stuck at the 20 EMA. It's not going up and not going down also from that 2000 odd level, and sells off at around 2070 level. So again, it's a no trade zone right now. Nasdaq, since the US markets were strong and all the magnificent seven were doing well, so it is now at all time high and it has broken out. So that is one which is giving strength to the uh, Nasdaq, and because they're having all are having good results. Amazon, Alphabet, Meta, so everything is among Nvidia, etc. They are doing well. Now, India's 10-year yield, after the budget had corrected a big time, but now it bounced back after the dovish comments of the RBI. It bounced. Sorry, after the hawkish comments of RBI, it bounced back up and up to around 7.11 odd levels. Because again, the rate cut scenario is slightly delayed in India, but again, it's in a declining trend line. Now here it is important. India VIX. This is a monthly chart of India VIX. So if you see from 2011 onwards, generally the VIX goes up to around 2025 levels, and on certain times it goes to 30, but then correctly corrects, and the lower limits is below 10 or around 10 or so. But if you see every time around elections, 2014, 2019, it goes up. The VIX goes up, and the volatility goes up. This rise or some incident in case it takes place, the VIX goes up. So one has to be careful. Now, if you see from here, uh, it is trending upwards after making a low of below 10. It is trending upwards, has reached the 16 level. So if it breaks out above these moving averages, then around election time it may go up to 20. So what will happen is the intraday volatility increases, and we start having more gap ups and gap downs, and the option premiums also go up. So it's basically a fair index. Now let's talk about Nifty. This is a weekly chart. So weekly chart, if you see the overall trend, it is positive, and the Nifty is making higher highs and higher lows. So that trend is not yet broken. So till the time that trend is not broken, one can remain bullish. Now coming to the daily chart, if you see from here, uh, last week or not last week, actually last Friday there was a big all-time high of 22 126, and then there was a sharp sell-off, and this week was range bound, but the Nifty on the daily chart is resting at 20 EMA. It has made a lower low already, lower swing low. So one has to see where it goes from here. uh, let's see the 30 minutes chart. Now this is interesting. So if you see here, this is on second it made a high of all-time high of 22 126, then immediately corrected, and the red candles are the big candles. Then it tried to go up, and then again it corrected. So this is that RBI policy correction which took place, the big correction, and it is it is making, if you see on a trend line, it is making lower highs and lower lows. So one has to be careful. So the selling which began last Friday extended through the week. Rallies were curtailed. Lower highs and lower lows were made after the new all-time high. Now, if the price continues below 21,682, which I have shown, this 21,682, which is the 20 EMA, then I think 21,500 and the 20 EMA or 50 EMA of 21,316 is likely, should be the targets. For traders, right now, if you see, the market carries a high sentimental momentum, which is good, which can always create swift, sharp rallies, which we are seeing now. Hence, it can go anyway. So the trend may be downward, but you can always have big upsides or swift 200, 300 point rallies on Nifty. Uh, Now, last week, the major strength came because of Reliance. It crossed that all time high and it is looking to go up now. Last week, it made a doji. So, there's nothing much. It went up and down, but undecided. So, it can go up, but if it breaks this, the high it had made of 28, 40 odd, then it will test the 20 EMA. But it is looking strong, and this is the one which is giving momentum to the market. The other stock which I have been talking about regularly is Adani Enterprise. It is looking good. It had a positive week and it is on an uptrend. And 20 EMA has also from below crossed the 50 EMA, so which is a golden cross. So remain positive here. And there's a lot of positive news on this. Uh, Nifty Bank is very volatile. Uh, and if so, if you see here on a weekly chart, it has broken below the 20 EMA and is testing the 50 EMA. And on the daily chart, so if you see, it is very close to 200 EMA and it may test that. It has tested that here, then rose from there. But that again, it had a big red candle on the day of RBI policy, but it bounced back a bit because it was led basically by SBI and some private banks. It went up on Friday. Uh, Very volatile. If 200 EMA at 44,674 goes, then lower levels of 42K, which it had made earlier here, sorry, here. These are possible here. So these were the lows from where it had bounced back. So this is becomes critical because if 42,000 breaks, then it will get into that lower highs and lower lows trend. So that's why it becomes important. The weak point was the Nifty Private Bank Index. This is the biggest pain point. Now, if you see here on a weekly chart, it is now at the 50 EMA and it is constantly selling off because of HDFC Bank only. HDFC Bank is below its 200 EMA with large volumes, if you see here, and it has sold off. So one has to be very careful whether that 1400 odd level is held or not. It takes a support there or not. Otherwise, it will go to these 1300 and below level in case this 1400 level breaks. The other problem is ICICI Bank. Though everything is good, but it also gets sold off along with the HDFC Bank because of basically FI selling. Hence, it is not able to go take the bank Nifty or the Nifty up, but it is still at that 20 EMA on the weekly chart. So be slightly careful with this. The star of the last week was Yes Bank. So I don't know what happened. Some life came into this, and from that uh, below 20 level, it has moved up now. It is grossly overbought and with large volumes, it has gone up and had tested the 32, 33 levels. So there is enough discussion on this. The point here to be understood is that even if HDFC Bank is going to buy a big stake in Yes Bank, it will not be from the retail or it not be from open market. So it will be people like SBI and other people who have large holding who will be selling the stake to them. So there is no reason for it to go up like this. So just be careful with this. The PSU Bank Index had a strong week. It has broken out above the trend line, rising trend line, and it's in a clear-cut bull market. And there is a divergence, as you see, between the PSU Bank Index and the private bank index. Uh, Hence, the PSU Bank Index is doing well. Why it was being led by SBI? It had a very positive week where from around 630 levels it has broken out and has moved around 100 rupees in a week only with large volumes. And as we have discussed, right now it is in momentum. Now the other stocks which were constantly running up, like IOB, etc., now they had gone to 80 odd levels and had become as expensive as Bajaj Finance. And now they are giving up their gains and they would correct because there is no fundamental difference which has taken place here. Only thing is that they are going up because their float is low and their 4-5% float with most of these banks which is there. Out of them, 1 or 2% is already still held by LIC only. So that is also not a free float. Hence, they are basically going up because of low float and low liquidity. So one has to be careful with these. The PSC index, sorry, Public Sector Enterprises Index is again. So if you see as the after this March or sorry November onwards, uh, if after every few days, 10-15 days, it has a big red candle where the mispricing gets corrected. So again we've had a big red candle again after rise. So be careful with the valuations in this sector because though it's in an uptrend and everything is positive, but the valuations have now become unviable. This is one of the good stocks in PSC sector, that is NTPC. It has corrected a bit, and as we have discussed, results are uninspiring. Though potential is good because of large demand for power and the other issues it has the in terms of green energy and all that, but performance is not commensurate to the price or the price action which is there in the stock. So it will correct. This 50 EMA should be a decent level to get into this stock, somewhere close to 300, 305 odd rupees. The other stock which is was doing well, which came up with good results, but is now consolidating is PowerGrid. This is a daily chart. So if you see, it went up to around 280, 290 levels and then has corrected from there. So again, it had gone into that overbought zone, but has now come below. So just watch this space. The space, both pharma and IT are the ones which are really doing well, and it may continue in the week ahead. And as we have discussed, the biggest pain point remains the private banks, where if you see there is delivery based selling now. So if the private banks remain weak and the others keep operating, so because of the large weightage in Nifty, Nifty may see a time correction more as compared to a price correction, as valuations are still not too expensive. So and sentiment is also good and liquidity is still favorable. Hence, we may remain in this range between 21,000 and 22,000 for some time before it moves into either direction based on news. Now, Nifty IT, I have been talking about this. It had retraced its fall, and I was telling about that there's a weekly chart. So it has tested the 78 and it has to go up now. It will test its all-time high of 39,479 in next few weeks. And last 2 weeks were very positive, and major constituents and the second rank IT stocks are doing well. Basically because there were low expectations ahead of their results, and we will see TCS has moved to all-time high. Now this is Infosys weekly chart. It went up, but it corrected after that. So we'll have to see what goes up, what happens to it from here. TCS, if you see, it has made a rounding bottom, and it has broken out from there to its all-time high. So uh, this is a strong. This is where the strength is right now. The other sector which I mentioned has strength is the pharma sector. Now, this is the weekly chart. So, if you see, this is the long term from 2015 odd trend line, and it has broken that trend line after all the falls and all that. It has now broken it, and it is much above that, and it is showing strength, and that is visible from the results of all the pharma stocks. So, if you are there, just be invested and be very careful with your selection of pharma stocks, because most of them the good news is already in the price. uh, the key trigger would be the for all these is the US markets, which is looking strong, as I've shown you with Nasdaq and S&P, which topped 5,000. So this US markets, despite the problem of yields and uncertainty on rate cuts, inflation, valuation, dollar, China, recession, etc., is looking strong, but it is very difficult to predict right now. Hence, if it is not clear what is going to happen, it will ensure that there is going to be volatility. So just be careful with this. Now the midcap, this is midcap 100 index. Again, the same issue as PSC. It is on an uptrend, but it has it has those nowadays it starts having big red candles where there is a sell-off takes place, and it is now it sold off, tested the 20 EMA. Now just keep a watch on this, because some of the stocks here are now uh, the results are not commensurate to the price of these stocks or the valuation. Same is the problem with small cap index. Again, it corrected. This is a daily chart. So on Friday it corrected, though Nifty was positive. Now I'll show you a divergence here. This is Devyani's chart. Now you see the performance was weak, and the stock, which was one time very favorite of all the people, is now below all its moving averages. It's trading well below the 200-day and all other moving averages. Now it's come to around 150 odd levels. This is, and the RSI is oversold. This is basically because the consumption is poor, and their results are mediocre, and so that private consumption is not taking place, which was earlier taking place. This is also because of a lot of competition. But the divergence here is Zomato. Now, if you see here, it's in the same space but it is doing better. And now it is Zomato, as I had brought out last time. The first target was taken out, and now it is heading to its all-time high of around that 166 odd at these levels based on their results. So there is a divergence in this. It's probably the market share of these people is being taken by people who are not listed, and that's why the Zomato and Swiggy, etc., are the beneficiaries of this issue. Now I'll cover few stocks today, which in my view are performing well. First one is Cummins India. They had a good Q3 FY24 with revenue growth returning to high double digits and EBITDA margins crossing 20%, led by continued strength in gross margin. This led to profit after tax growth of 27% year on year. Domestic businesses blazed all guns with a higher horsepower segment, both HHP and heavy duty, that is greater than 320 kilowatt, reporting 70% year on year growth. In addition, both industrial and distribution businesses maintained revenue growth in 20s, that is 20%. Domestic power generation business has benefited from large surge in key HHP, that is high horsepower segment, such as for requirement for data centers, real estate, and infrastructure. Exports fell sharply by 40%, both sequentially and on year basis, with both LHP, low horsepower, and high horsepower reporting similar fall year on year. Penetration of its domestically launched CPCB4 compliant products is in different other geographies also is likely to be successful. It is already launched in Delhi and all that, and it may get launched in Europe and will bring it a potential upside on its export front. Now, data centers can add a significant amount to overall revenue base. Uh, I will highlight subsequently the company is approaching peak ROE and EBITDA margins, which it saw in the last cycle also around 10 years back. So one has to be careful. Uh, what is happening now, if you see a large, I think they had a large order delivery for a data center project in Q3 FY24, hence the revenue was higher. But all these order deliveries can be lumpy on quarterly basis, so next quarter may not be that good. uh, but their CPCB products are seeing good response after the initial rollout. So as the volumes increase, they will recover their cost and margin should improve. Uh, what they are projecting is a revenue growth as 2x of GDP growth, and they are also offering longer warranties. So the aftermarket business, that is a spare business, has lot of growth headroom. Now let's see their quarterly revenues. So if you see, this is Q3 FY24. Now the total revenues were up 16% year on year and 33% Q on Q. So that is why I was saying that they had a big order in this thing, and they did around 2,534 crore revenue. The EBITDA was up 30% and 58% quarter on quarter, and 30% out year on year. The profit was up 26% and 38% respectively. So the margins have also improved, and so it was reflected in their EPS, etc., which has gone up 26% year on year and 38% Q on Q, and that is the reason why the stock has moved up. Now, if you see here, uh, if you see, this is the cycle. Now, the depth of the cycle was in FY 2020, and it has now moved up. And we have seen this thing happening at the peak of these cycles in FY10, FY11 also. So what happens is, at the peak, the margins, EBITDA margins, go to around 19-20% and then go down, because that is the peak demand cycles, and after that the demand dips. Similarly, ROE also. So if you see here, FI10, FI11, it went to around 30-32, then it dipped because the demand dipped, and then it again starts going up. So one has to be slightly careful with these stocks, because this is the peak of the cycle right now for them. Now, if you see here, FI25 expected EPS is around 63, 64. So at 60, even if they do 60 to 63 EPS, I mean, if you give them a P of around 40 times, 2400 to 2500 should be a decent price. What is happening is people are pricing in FI26 already earnings now. Hence, the price has gone up. The rest, all ratios are good. Their profitability is expected to improve. Their valuations are becoming better, and they are a dividend-paying company, etc. So things are good for them. Now, if you see their quarterly revenue breakup, the industrial part saw 20% growth. The spares, that is aftermarket, saw 25% growth. Exports were down, lesser demand, and power gen was up. So this was the basically four segments of their business, and power generation saw 50% growth. So that was a big contributor to the good revenues. Now, if you see the technical charts, so if you see, it has had a rising trend line, and this is the stock which is doing well. And now it has broken out. But if you see, it was building up to good results, so it was expected that it will have good results in this quarter. And after the results, it has just broken out. So one has to be careful and not chase the stock and buy it closer to the moving averages, because right now all everything good is priced in. Next stock which I'll cover is Carysil. I've covered this earlier also. Uh, Again, it had a very strong revenues in third quarter, up 36% year on year and 15% Q on Q, aided by rebound in domestic channel expansion and overseas sales. Uh, Basically, normalization of channel inventory in USA. Hence, their sales went up. Quad sinks and appliances segments revenue saw 60% year on year jump, while it declined 24% year on year for stainless steel sinks. But stainless steel sinks part is likely to improve because they are going to supply to IKEA from fourth quarter. And they are widening their product portfolio through organic and inorganic routes. So they're doing a lot of acquisitions. It has a tie-up with a renowned global company. Recent one is Howden's Kitchen UK. It's a leading worktop supplier, and there is an opportunity of supplying around 150,000 units. It will help in expanding its kitchen appliances portfolio. So what to see, they're expanding from sinks to kitchen appliances. Recent acquisition of United Granite in USA, revenue potential of 130 crore. Current capacity utilization is 60%, will help customers in providing fully integrated seamless tops with accessories, faucets, and sinks. The Tap Factory UK will drive premium faucets portfolio, industry growth 50% CAGR. So on strong demand and 70% capacity utilization for the sinks, it is thinking of resuming the quad sinks deferred capex plan in India. Now they have increased their dealer network by 100 plus in 3 months to 3,200 plus currently. So if you see here in Q3, there was a strong revenue growth, 36%, EBITDA growth of 41%, profit before tax was up 56%, and EPS was up 27%. Gross margins are 52%, and exports are 42%, and domestic sales is around 36%. So if you add these up, revenue mix, if you see exports 52 and overseas, that is STL UK is a UK company which they had acquired earlier, and others is 28. So 80% of their revenue is from exports and domestic is 20% right now. Now, if you see their revenue breakdown, quad sink was up 57%, but steel sink was down 24%. Appliances and others were up 62% year on year, and solid surface was up 27%. So revenue mix, if you see, third quarter, quad sink is 50%, steel sink is 8%, it is going down. Other appliances 12%, and solid surfaces are 28%, which is basically held by their inorganic route of acquisition. Uh, let's see their projected growth. So this is in millions. They are projected to do around 923, but the management is saying they will do 1,000 crore revenue in FY25 with 20% margins. So which should expected to do EBITDA margin of 20%. So which will drive profits and EPS. So they are expected to do around 3940 on EPS in FY25. So it can easily at 30 times trade at around 1200 right now. So that's a simple thing. If you see, all the ratios are likely to improve, go above 20%, ROE, ROC, return on invested capital, dividend yield, they're going to give dividend, net debt is reducing, receivable days are reducing, inventory days are reducing. So they are becoming more efficient also. Now see their chart. Now it had a dip, but now it has gone above, and it's now at around 1,000 odd level. There is still some potential here because of strong revenue upstick in Q3, and they are scaling up their domestic business by expanding their dealer network, and B2B is the focus right now on projects. So as I said, management is guiding for 100 crore revenue, including inorganic, and 20% EBITDA margin for FY25. So we've discussed about EPS, so it should do around 1200. It has already had a rise. Uh, it continues to gain market share in quad zinc from its European and US based competitors due to advantage of lower manufacturing costs. Right now, their cot sinks are at 80% capacity utilization and six steel sinks are at 67% capacity utilization. So they are likely to do capex of quad sinks. Red Sea issue is an opportunity for them because the Chinese people are not able to provide because of this, and they are getting a lot of orders. 90% exports are on FOB basis. Only company in Asia which makes these quad sinks, and among the four worldwide to manufacture these quad sinks and kitchen sinks. And they have their customers like leading retailers like IKEA, Grow, Menard, etc. So it is a business which is likely to do well uh, based on the present requirements. The next stock is Triveni Turbine. This is an interesting stock. Triveni Turbine is supplying turbines to 25 to 30 countries. Demand from Middle East and America is strong, while East Asia has remained slightly weak. Export share should increase going forward. Order inflow came at 530 crore, up 26.4% year on year, with export orders jumping 67% to 320 crore, driven by strong traction in API turbine orders. API turbine is a brand of turbine or a given brand of turbine by which or given specification of turbine requirement. So there are different API numbers, API 612, 611, 671, like that, by which the turbines are sold. Order book stands at rupees 1580 crore, which is 1 year's trailing 12-month revenue, with inquiry book up 14% year on year in 9 months of FY24. Domestic inquiry pipeline is robust 57% year on year, owing to strong demand in biomass, renewable energy, waste heat recovery across industries. Major orders are from renewable energy segment, with increasing inquiries from oil and gas segment. Uh, Basically, if you understand what a turbine does, is it converts some flow of water or gas or heat or something like that into electricity. So that is where there is a requirement. Focus on diversifying growth avenues and improving profitability by expanding in higher margin aftermarket service portfolio. Again, same thing as Cummins. Uh, because a life of a turbine is around 15 to 20 years, so it has a huge potential for servicing and aftermarket thing and providing spare parts, which is as much as the cost of the product over this lifetime, with more technology based solutions as well as exports businesses. The strong revenue growth is driven by strong exports and product sales. Now here I told about this API. So these are those requirements for various turbines to be used for petroleum, chemical, gas industries. Uh, Out of their 400, and so if you see here, they did around 430 crore of revenue in, this is in millions, so 431 crores of revenue in Q3 FY24, which was up 32% year on year. The EBITDA was again up 32%. Profit before tax was up 35%, and profit after tax was up 50%. And so what I was telling was that out of these 431 odd crores, product sales were 290 crore and aftermarket sales were 140 crores. So roughly two-thirds of the business is product sales and one-third is aftermarket sales, which is basically servicing. And the domestic export mix is at 56 to 44%. So exports are picking up, and it's a big opportunity. The servicing over the life of a turbine is nearly 100% of the cost as service, and they have increased their R&D spends to up to 3% of sales. So now if you see here, they're expected to do around 2,147 crore in FY25, which is a growth of around 27%, and similar growth expected in FY26 also. And EBITDA is margins are expected to remain above 20%, and so the profit is also expected to grow at the same levels because the margins are established. And if you see here, it is expected to do around 11.8, that is 12 odd rupees, 11 to 12 rupees in FY25, and around FY26, which will come after 3 months, is around 15. So at these valuations, if you see, it was trading at around 69 or 50p. So even if you give it a p of around 40, it should trade from 450 to around 500 levels for next year. So now if you see here, uh, see the chart, it made a high of 455 and it corrected. And correct, the correction was not because of performance. It was some selling which was taking place. It was a great opportunity to accumulate this stock. Now it has retraced, and then based on this result, it has now retraced 100% and has gone up also now. 466 is the last close with high volumes in the last week. So this is last week. It has gone from around 360 odd levels to 460 level, 100 odd rupees of straight move, just because of good performance. It was building up, and I've been talking about this. Only thing is that it moved into this price action now only, so which we can't really predict as to when the price action will take place for these stocks. I have finished. We'll take questions now.